Hey folks, Len Fletcher here with RE/MAX Moves, and today I'm sitting with one of my preferred lenders, Anita with Union Home Mortgage. And you've been around for a little while, as have I. So what are some of the common mistakes you're seeing the buyers making out there?
Lynn, I think by far the most common mistake is buyers not getting pre-approved before they start looking for homes. Pre-approval takes very little time, 10 minutes over the phone, 10 minutes online, and it requires virtually no cost and forwarding the lender pay stubs and bank statements, and within 24 hours you're pre-approved. It's hard when buyers fall in love with their dream home only to find out that they can't get approved for it. And if you were selling a house, who would you rather deal with? The buyer that has a pre-approval letter in hand, or one that hasn't made the effort to get that done?
So getting pre-approved is key. I can't believe a realtor would work with someone that wasn't pre-approved.
Exactly. Every once in a while we do find people come to you with a contract in hand and are not pre-approved.
Wow, that's crazy. Okay, what else?
I think maybe another mistake that buyers make is just prior to closing, when they think that everything's been done and they have final approval, they decide to go out and buy furniture for the new house.
No.
Or they take out a loan for curtains and blinds. Or they quit their job and go to work for a competitor. And what buyers don't know is that just before closing, lenders are going to recheck credit and make sure you're still employed with that same employer. Sometimes those things will keep you from getting final approval and closing. Other times it'll delay the closing. But either way, it's not a good idea to change your financial picture until we've absolutely positively closed.
Oh, that has to be discouraging.
It is.
Oh, so don't change your job and don't go out and buy anything. Okay, anything else?
I think the last thing I would say is something that new buyers as well as experienced buyers may not be aware of, is that lenders look at the source of funds that you're bringing to the table for your down payment and your closing costs and your escrows. And we want to be sure that they're from an acceptable source to the lending industry and not from an illegal source. And so we look at the last 2 months' bank statements and look at those deposits. If they're payroll related, those are easy to determine, and that's certainly acceptable.
Mm-hmm.
If it's a tax refund or Social Security income, but it's those unnamed deposits that show up on your bank statements that we have a concern about. Sometimes those deposits can't be properly documented to mortgage industry guidelines, and you won't get final approval. And other times you can document it. It's just a lot of paperwork on the part of the borrower. So the moral of that story is make sure your lender knows the sources of deposits on your bank statements for the 2 months prior to application and for the month while you're waiting to close.
So don't accept that $10,000 in cash from Aunt Greta without some kind of documentation.
Exactly. And don't think you can take the money that Aunt Greta gave you a year ago that you've kept under your mattress and all of a sudden put it in your bank account and get mortgage approval.
All right, fair enough. Well, there you have it. Those are 3 common mistakes that Anita has experienced. Don't make them. Until next time, have a great day.